you know it's Friday. Every Friday we come at you at the noon hour, bringing to you Finance Friday with your host, Rob Morales, RCO Network. With me today, I have a special guest. He is from the lending world, from housing, prime lending to be exact. Please welcome Mr. Victor Alarcon. There we go. There he goes, yeah.
Good afternoon, everybody. I'm so glad to be here. Like I was telling Robert, I shaved my legs. I also made sure not to put very much foundation. I didn't want to look like Edward from Twilight, just glimmering over here in the sun or in the spotlight of the studio. But no, I'm really happy to be here. Thank you so much for the invitation.
Yeah, there he is. There he is. So I've been practicing on my announcer voice because we do have a couple other guests. They're usuals. They're the usual types that come along.
Yeah.
So please welcome. Hold on. Let me see if I can get it ready. Okay. I got to start the music again. In this corner, bringing into at 185 pounds, a lean, the featherweight champion of finance. Please welcome Mr. Francisco Ayala.
Hello, nowhere near 185 pounds. I'm 150 pounds soaking wet, dude. And I did not shave. I like to go all natural, so it's all there for the taking.
Wow. There we go.
And in the other corner, hold on, I gotta do it again. And in the other corner, we have the king of crypto, self-proclaimed, that is, Mr. Sacramento Satoshi.
Hi.
There he is. Hello, he's back here. I kind of screwed up.
And I'm just regular me.
You're just being you. You gotta speak up, though.
Me. I'm at home. Not in the park, though.
Oh, turn up that mic a little bit, because I can't hear you. Anyway, okay, so I completely screwed that up, so whatever. So we have all our guests here, all brought together in one. I got to figure out a longer intro song, but if you like what you're seeing and you enjoy watching us every Friday make a fool out of myself, out of ourselves, join us and learn a little bit about money and the things we got going on in finance.
Absolutely.
So, hello. So I'm going to bring everybody back together. So I screwed up. I got to really try this stuff out better. So we're all here to talk about finances. So if you're joining us live, please drop those questions in those comments. We'll get to them as we go along. If you like what you're seeing here on YouTube, go hit that like button and subscribe. You know, what else are you doing on a Friday at noon? Come on, you're not working. You know you're not working. The other thing is, if you're on Facebook or on LinkedIn, give us a little heart, a little love, just because, you love us and you want to keep hearing us talk endlessly about whatever. So hello, everybody. How's everybody doing this week?
Doing good.
Doing well.
Anybody making money?
I'm making some money.
Everybody's making money.
Oh, here we go.
Even people that don't work make money nowadays.
Oh, that's true. That's very true. Unemployment is still a bit of an issue, I would say. Anybody hiring? Henry, you hiring over there in Sacramento, Lynn?
As far as I know, they're hiring, but I think until September, when you get maybe some benefits run out, there may be better chance of getting more workers.
Victor hired. He's hiring some child labor. That's why he's here. He's got his assistant here.
He's actually the oracle. He's the one that puts it all together. He'll tell me, hey, you need to remove this individual. You need to turn around and have them pay this debt. He knows the debt to income ratios, everything.
So thankfully everybody's here together. I did want to start off the conversation today regarding the title. It's rock, toilet paper, scissors. So, back about a year ago, when all this craziness, the cough happened, we got into this whole mode and modality of scarcity. If anybody remembers, I'm sure all of us remember the toilet paper scare of 2020. Yes. So I remember walking into some, grocery stores, whatever store, everybody's just got like hordes of toilet paper. And if there wasn't, people were like searching, and you would see like this ongoing, like back and forth in the toilet paper aisle looking at empty shelves. And that was just amazing. I remember taking pictures and like even auctioning off some of the toilet paper as I saw it. And I'm like, I hoarded it. And there was also limits on there. You can only buy one package at a time, all this stuff. So talking about that, I wanted to kind of go back to those days of craziness. Why did we get so crazy in the first place?
I think we're just it was impulse more than anything else, just impulsive. But I will let you in on a secret. If it ever does happen again, camping section at Walmart, they have the RV toilet paper.
Yeah, but that's not the soft play.
It doesn't matter.
That is not the soft
At
play.
that point, it's either that or your undershirt. You know what I mean? So,
I did a full week of printer paper, so there you go.
Is that the week you couldn't sit down? You were really chafing for some reason, and you're like, no, it's my cirrhosis. I
why
swear.
is it pacing?
All right.
You remember that, Henry?
Yeah, I think it was just, I mean, back a year ago or more than a year ago when it started, it just, there wasn't that much information. People were scared.
Yeah.
And they were just making decisions based on emotion, which I think that translates to same with housing or any kind of investment. If you make decisions based on emotion, it leads you to make mistakes. But people weren't sure, so they saw other people buying the toilet paper, and so they thought maybe I got to get some too.
Well, and that brings me back to the discussion. And the reason I brought up toilet paper, because it's all the same emotions, everything I'm seeing. I do primarily real estate. And I don't just sit around doing shows all day, which I know it kind of seems like it. But, Victor and I are pretty much in the same industry. He does the lending side of things, and I do the actual physical real estate part of that, the transaction piece of that. And a lot of these motions and a lot of these feelings that people experience during that toilet paper era or exactly what they're feeling in the housing market. And that happened in 2006 through 8 before the big, kerplunk. and it's very reminiscent of what's going on now.
Absolutely. And you bring up a good topic. Back, I don't even remember what they call it. They don't call it the Great Depression. They call it the Great Recession, I think is what they ended up calling it in 6 and 8. But now what happened was these individuals were coming in, and it was almost just like offering auction level numbers and having to pay the real estate, the agents' numbers and commissions and everything else. And it was just solely off of impulse, so many of them. And finally, I think now the market's seen a little bit of fatigue. It's not, people are speculating that it's the housing boom is over. I don't see that it's over. I don't see 5,000 homes available in one certain zip code anymore. But
well, the great part about the toilet paper analogy is that we still need it.
Yeah.
no matter what we do, what happens, if there's a complete desolation in the housing market, whatever, we still need a place to live, just like we need toilet paper. Well, sort of. I mean, you can get creative,
Undershirts.
I did see a video this week where some woman was trying to cut a bed into her home. And this was in Tempe, not into her home, her car, because she was getting evicted. Basically, she couldn't pay the rent. And so she's moving into her car to make a bed, and she's like, "Well, I can't. I'm on retirement income, which is we'll get to, and you guys will help out in a second. I'm on retirement income, and I don't have a place to live. They're increasing the rent. I can't afford this. So I'd rather go live in my car.
Wow.
Are you guys seeing any of that in California, or you're here in Phoenix, Frank? So.
All right.
No, I think it kind of just plays into this bigger issue of, so basically, like, inflation is constantly happening. That's basically the Fed's mandate is to keep inflation at a certain rate. And when inflation is low over time, they call it the invisible tax. You don't really see the value of your stuff going down. It only appears when you get this hyperinflation. When you see things like going up 15, 20% every year, then people are like, whoa, the housing market is in a bubble, or it's so expensive, it can't continue to go that way. So I think that's like the bigger macro issue is this a short-term thing, which is what the government is saying? It's like, okay, prices, they started to admit for a long time, they were saying, no, it's not a problem. Now they're saying, okay, yeah, it did go up a little bit, but we think it's going to be short-lived. And then there's the other side that say that this can go on for a few years. And of course, just like everything, just like the stock market, the housing market ebbs and flows. You'll get spikes, prices go up, and then you'll see them. Okay, they're settling down a little bit. But I don't know. My feeling is that this is going to continue to go on for several more years. The government they had a meeting this week and said, yeah, we see inflation. This could be a problem, but we're not going to do anything about it right away. There's an infrastructure bill coming out. They're still continuing to send checks. It's just money's going everywhere. And when money gets printed and sent out everywhere, that floats all the asset boats.
Yeah, and I think the thing to think about, and the thing that we can relate possibly is, what can people do in this environment, in this situation? I'm helping out a client of mine. He's listing his house, and he's in a particularly tight spot. He hasn't worked in about 6 months, and he wants to sell his house. He's going to cap out. He's going to make well over $100,000 on that house, but just in a situation. And where he's going to go after that, I don't know, because he doesn't really have a place to go. He doesn't have income, and he's thinking about moving back home with his mom. And he's in his early 30s. It's not necessarily the best of situations, but he's trying to cap out while the market's still at the peak. And I'm concerned that we're going to kind of continue to see some of this stuff.
I think we're going to continue to see it. I mean, let's not look at that situation where they're unemployed, but just the supply and demand right now. A lot of people are turning around. Well, let me sell my house. Let me make all this money, but what am I going to buy? There's nothing to buy.
Yeah, and rental rates are high too.
Rental rates are crazy high. I also deal in El Paso, Texas, and rent is $150 less on average than what it is here, which is nuts. Yeah. So not only that, but I think I was reading Bloomberg price point now here average $350. What was it 2 years ago?
Oh, I remember comping stuff, and the median price was about $250.
Yeah,
so it was about 100,000.
Yeah.
And we're coming close. Looking at the stats with compared to Sacramento and San Francisco, LA, we're only about 100,000 shy from their median price point, and San Francisco is going down. And, I just saw another article today about the crime rate in San Francisco is going high. So, again, the takeaways, the feedback is, people are in tight spots. And I don't know if that's, aggregate across the country, if that's only in small pockets. I just know it's not sustainable. And so is there ways, or certain things that people can do is really the question, that they can not necessarily avoid these situations, but make them better? Is there resources out there? Or is there a suggestion that we can give somebody in these spots besides sell the house and move in a car?
If you're unemployed, I mean, your sources are limited, basically. Yep. I mean, there's not much you can really do. You can't refinance the house because you have to prove to the bank the capacity to pay it back. And there's no capacity, and they can't turn around and really take the unemployment income in. So that's a tough spot. I think that's where it goes into the alternative methods of income and whatnot.
You mean like OnlyFans or something?
Maybe.
I got my account. If you want to sign on for my OnlyFans, hold on. If you want to sign on for my OnlyFans, go ahead and click on robertmorales.onlyfans.com. I'm just kidding. I don't have an OnlyFans, but
well, I think as a general rule, you don't want to sell out your assets. You want to accumulate them. So if this guy, he's like, I know people that, oh man, I bought a house at 200, now it's at $1 million or whatever. So that entices people. Like, maybe I should sell. But that's what a market is. It's supply and demand. But in general, if he's going to sell his house and then move in with his mom, why not just rent it? Usually, as the prices of housing goes up, so does the rent. Yeah. So you can rent that, take that money, and then use that money to do something else with it. I mean, I just don't see, like, you're gonna sell the house, move in with your mom. Now you have a bunch of cash, and then, like we said, what do you do with it?
And hopefully his mom doesn't lose the house.
You could put it in. You can put it in Bitcoin. I mean, that's the only.
Oh, are you getting in the next topic already?
That's controversial. That's controversial on this group.
Well, most people don't have, $40,000 to buy one Bitcoin, Mr. Satoshi.
Well, I know you always say one. I don't have 40 grand to buy one. You don't have to buy one. You don't. Also, you can buy 0.1 at $4,000, Robert. Okay. So you have to get that out of your head. Like, it's 40,000 or nothing. That's not really the option.
He is my older brother.
But actually, just on a personal level, not investment advice to anybody, but I kind of feel like, I think I said before that August is kind of a slow time for the market. We haven't, you usually get every 6 months, you get a 5% correction. Every year you get a 10% correction. And so it looks like it kind of has started that way. And so, I had been kind of selling looking at my stock portfolio, what is underperforming, what did I get that I thought might do well and maybe hasn't done as well. Maybe I can move some of that into cash. And actually, like I've had Apple, I've had Apple for a long time, 10 years. I think my average cost base is somewhere like $15 or something. But I took 20% of that. It was up at, it went from, it was like $115, went to $150 in a relatively short period of time. And that's a massive company. So I took 20% off of that and put it into crypto. So that's what I'm doing. And like I said, I think I said on your show, 30,000 was a good level, had gone to there. And so far, it seems like it's panning out. I think the previous short, the high that it has to kind of get through is 41,300. That was the kind of the previous resistance that I had a few months ago. So if it can get past that, I think Bitcoin will be off to the races. There could be a pullback in the market, which could drag it down again.
But that's everything. But
I think it's becoming more uncorrelated. So
I can't even chart Bitcoin. Charting Bitcoin is insane, by the way. But anyway,
okay. Well, I'm just telling you what I do. But anyway, go ahead.
Hold on a second. So, so if you're watching us here live on a Friday, and you want to make any comments or questions regarding finance and the things that we can help with, we have Satoshi here from Sacramento. We have Victor here from Prime Mortgage, not Prime Lending. I'm getting it right. I got it written down, but I'm watching. Francisco Ayala from Coleridge Group. So if you have any comments or questions, put those in the comments section. Give us some love because we love the loves. But to bring it back to Frank a little bit, he did have some tools, I think. Let me get rid of that. So he did have some tools that he wanted to kind of share today in today's show. If you're barely dipping your toes in this stuff and you really want some answers or really want a little bit more direction, Frank wanted to bring some stuff that he found it's a pretty DIY a way to kind of look at your finances. Obviously, reach out to Frank if you have any specific questions, because he's a financial advisor, just not onto today's show. No, he's not financially advising anybody today on this show, but he will off the show. So his email and contact information are in the comment section below. So Frank, you had a couple things you wanted to share, right?
I did, but real quick, before I get into that, just to comment on a lot of the things that we've talked about so far. I think, because we're just talking about, buying this real estate or selling real estate or Bitcoin or stocks or whatever and stuff like that. I think, the important thing to emphasize is the how important it is to plan, right? This lady that's going to live in a car now because she's living on Social Security income. Maybe if she would have planned, many years ago, maybe she wouldn't have been in this boat. People, that are unemployed, if you would have planned a couple of years ago, maybe you would have had your savings account. It's just, it's so important to plan to be able to avoid making these rash decisions or these, decisions that you don't want to make. So, but anyways.
That's kind of like really all of society. I was actually having a conversation with Violet last night about people not really being educated along the lines of finance and just making these decisions because they weren't really taught. I mean, we're all from a small town, so it's not like our dad for sure didn't say, "Hey son, you got to put your money in an IRA. Okay, you can pick between a Roth or a traditional, but I would suggest Roth." He didn't sit down. He's like, "Hey, save your money." That was it. That was his whole financial advice.
He comes from a mindset back in the day when you had pensions. So in his mind, you work for a company for 25 years and then they take care of you. So there's no need, and you get Social Security. So the government's going to take care of you. The company's going to take care of you. But then governments decided it's cheaper if I just take that away and give it over to the people, let them deal with it. Yeah. And so that's how the whole 401k and all that kind of started. But people don't get the education that they need to do that. So yeah, you're correct. My dad was just like, let me pay the bills. And then basically the money that I have, I'm going to spend it. Spend it on trips. Spend it on
you need to save
3
your
trucks.
Money. You need to save your money, son, because on high yield Bitcoin might come up one day. Yeah. Anyway, sorry, I didn't mean to cut you off, Henry. So, Frank, I'm sorry. You were saying?
That's okay. Yeah,
that was my dad.
You're right. People do not get educated on this. On one of the most important things, that they should learn, or if they're not willing to learn, at least learn enough, but also kind of work with an advisor if they're not willing to do the whole thing. But last week, we started talking about asset allocation. This is still here. Give me 1 second. Last week, we started talking about asset allocation, right? And so here we're going to go a little bit into a deeper level, like the next layer in as far as investing. So people If you want to learn a little bit and you want to maybe, look at your own portfolios, um, grab a pencil, grab a paper and pencil, because I'll just kind of go this very high view level of things. I found this tool that people can. It's for free. I just googled like portfolio analysis, free portfolio analysis, and this thing came up called Morningstar Instant X-Ray by TD Ameritrade. And so anybody can do this. Basically, what you want to do is you want to input your holdings. Give me 1 second. Let's see. I inputted some holdings. Let me see if I can get them here. Here it is. So these are I just did I just made a basic portfolio, right, of Vanguard ETFs, something that people can probably do on their own. And the way I allocated was a 70-30. We talked last week about asset allocation. So I did this one very basic, 70% stocks, 30% bonds. And so what can people look at to see if their portfolio is properly allocated or not? Right. And so one of the things that you might want to look at is, again, 70% stocks, but what percentage of them are on non-US stocks? Can you guys see that here?
Yes.
So basically, for most institutions, most like model portfolios that you'll get from BlackRock or Fidelity or Vanguard and stuff like that, the ratio of non-US stocks to US stocks is usually half. Okay, so for example, if your US stocks are 50%, then your international stocks are 25% or something like that. That's kind of the recommendation. So that's one thing that you can look at. If you put in your asset allocation here, your holdings, see how much of it is in the US versus non US. And you do want to have, again, based on those recommendations, about half of your equities in international stocks. What did this? Let me see what else this says. Again, kind of a breakdown of the specific reasons, the specific regions. I'm sorry. Diversified across all the sectors. You want to make sure that they are diversified across all the sectors. And then something called the stock style. This is like a Morningstar table. You'll see this quite a bit a lot. Whether your stocks are value, a blend, or a growth stock, and whether they're large, medium, or small cap stocks, right? And so make sure that you're all over the place, right? That you have assets everywhere. I tend to favor small cap stocks because that's something that has historically outperformed the large cap stocks, but they're a little bit riskier too. So, but make sure that you at least have some of it in there. And then bonds as well, depending on if you want to. Bonds gets a little bit tricky. There's a lot going on there, so I won't get too much into it. But one thing that you do want to look at is your expense ratio. This is a dirt cheap portfolio, expense ratio of 0.05%. So something like that, don't make it too expensive because that starts eating away at your returns. So again, this is just a free tool that I'm sure there's others out there, but just make sure that you kind of go into a little bit deeper level from your asset allocation. You pick your asset allocation, 70-30, 60-40, 80-20, whatever it is. Now go the next step and look at how it's invested, right? What percentage is in US stocks, non-US stocks, large cap, small cap, mid cap, all that stuff.
Yeah, and I think a lot of people just do feel overwhelmed, a lot of this stuff, and I think the easiest solution for me is just to call Frank and walk through this stuff with him and kind of go through that. Because not a lot of people have the time or the energy to really figure out how to actively manage their own portfolio. And so again, if you're available, Frank, they can reach out to you by email or whatever contact. I think we got the website up too.
Yeah, for sure. But what I would say though is that it's fine if you want to work with a financial advisor. That's great because I mean, as I mentioned in the show before, financial success is a lot more than just investing. It's debt management, tax planning, a whole bunch of other things. But if you are going to work with a financial advisor, make sure that you know the basics. Okay, you don't want them to do whatever you want because. Sad to say, but there's a lot of people that will take advantage. They'll put you in high cost things they'll put you in, something that's not truly diversified just because maybe they get commissions or something like that.
Yep.
And so you at least have to know the basics. You can't just delegate everything and say it's not my responsibility. It's their responsibility. That's not true. You definitely have a responsibility in knowing enough to be able to know that you're okay.
And so, where do the hot stock tips go in all that planning, sir?
Well, we're going to layer by layer. Last week we talked about asset allocation. This week we talked a little bit more about portfolio construction, and then we kind of go into security selection and stuff like that. So,
and see, that's the crazy thing to me too. Is like there's so much to finance and so many things to kind of break down. I think for the most part, people do feel overwhelmed. They're like, I don't know. Where do I put my money? Dogecoin. Victor's got Dogecoin.
I'm doing great.
Henry says no.
It's my golf game.
Henry says no Dogecoin. No on the Doge. Why? Henry?
Yeah, sorry. I think I've said it before. There's just no utility in it.
Oh boy.
So you got to know. Okay, here's a good example. You got to educate yourself. So you got to know what the different kinds of crypto are, and just the name cryptocurrency already confuses everybody because they're not currencies. Only a small number of them are currencies. And so Doge, what it has is brand recognition. So I think even my mom knows what it is. It has the social network kind of thing. So if Victor buys some Doge and he doubles his money, he's going to tell you and he's going to tell Frank, and then you guys might buy some. But the underlying asset, the utility, what is it going to be used for? There is none other than buying a hot dog at some, I don't know what is
ball game. Park
some basketball game. So
we can't mention basketball.
I would not buy it.
Traumatized
so,
but
that's just my.
Can't mention basketball.
Doesn't mean you can't make money on it, but I look for things that have some intrinsic underlying value that are disruptors. And for me, that I go towards Bitcoin. I have a majority of Bitcoin. I have a large portion in Ethereum, and then I have a few smaller ones.
Let me ask you a question, not to interrupt. So let's say we have a beginning, crypto investor, and they're hearing this because, so many individuals, they see Bitcoin and they're like, oh my God, 30,000, 36,000, 38,000 for one coin. I have $500. How do I even start? And I think so many of them get threatened by even investing, and then they hear Doge and they're like, oh, I can turn around and do that. And then all of a sudden they lose like $78. They're like, this sucks. I don't want to do this ever again.
Well, don't use Robinhood. That's not financial advice. Do not get a Robinhood.
I wouldn't say don't use Robinhood. Robinhood is.
So I was in trouble this week, Henry. We talked about it later.
Well, if you think about it, so here's how you can get over it. One Bitcoin is 100 million Satoshi, okay? And so $1 will buy you 3,000 Satoshis.
That's a lot of Henrys.
That way. So that's one of the benefits of Bitcoin. It's easily divisible all the way down to 100 million units. And so $500 would give you how many Satoshis? I don't know. I'd have to do the math real quick, but
oh, there you go.
It's like something like one and a half. So $500 will get you 1.5 million Satoshis. Think of it that way.
Wow. But I think
that might be the currency of the future. I don't know, but go ahead.
So it's like the common person. I keep going back to that because I feel like I'm the common one. I'm not knee deep into crypto. It's hard for me to kind of manage the finance stuff like Frank does. I'm very topical and I try to be active with my stuff, but I don't have the time necessarily. Right. And Victor's busy. Look, he brought his kid. Buddy.
Okay. I use him as a reference.
So
which one should we do? This
you either have to learn about it, or you're going to make, like we said, you're going to use emotion and make mistakes. And so I've tried to make it pretty simple. Every time I'm on your show, I'm like, the simple thing to do is you got to get some Bitcoin. That's number one. If you don't have any crypto, just start with Bitcoin. That's not financial advice, but that's what I did. And you have to think of Bitcoin is a store of value. It is, so it's kind of a mixture of real estate, and it's kind of a mixture of, let's say, a tech stock. And so we talked last week, you got to get assets, you got to get stocks, you got to get real estate. Well, what if I don't have $50,000 to buy a investment property? Well, you can do that you get the same kind of thing with Bitcoin. It's just imagine just like Amazon digitalized the retail buildings, Google digitalized information, Apple digitalized music and photos. Bitcoin is digitalizing property rights. Okay, so there are 30% of people in the world do not have access to banks, but they have access to phones. So how do they get access? And they don't have access to Wall Street. How do they get property rights to them? They can start with Bitcoin, and you're seeing it with El Salvador. You're seeing it now with Kazakhstan, Paraguay. There are all these little countries, but that is just a beginning of hopefully something bigger.
Well,
And so what did?
and
Go ahead.
I think that the hard part for people to grasp is, do you play World of Warcraft or like a Clash of Clans?
No.
I know Henry
Nope.
does. So basically in Clash of Clans, any kind of like game system, and there's some sort of monetary thing in there you have to buy buildings. So like in Clash of Clans, you have to buy gems. If you pay your dollars, you can buy like 60 gems. You spend $100 on the game, 60 gems, and use those gems to build whatever. And it's this fake world, it's just this whole fake world. And I think it's hard for people to understand that Bitcoin is very much like those gems. It's in the ether. There's nothing tangible.
Right.
So it's like, well, how do I own something that's intangible? It's just as easy as if I buy those gems on that game platform. And currently I don't buy any gems because I was doing that for a while and I spent all my money and it was just stupid. I get nothing from it. And I think that's the hardest part, that people haven't, because in every narrative, everywhere you go, it's like, hey, I made $10,000 in Bitcoin. They didn't make, whatever, 1 billion Satoshis. They made $10,000. So the plan, the idea is like, hey, I made this money here in Bitcoin and I want to use it in dollars, because that's in the narrative. That's what they're saying. I made 10 grand in Bitcoin because
Right.
the initial reaction is I'm going to cash out and then save that as my asset, because
Right.
dollars are still valued higher than that asset class.
But I think it's also important to the education aspect of it. I mean, doing this, I think it's very important because, I mean, how many individuals have those myths about investing in crypto or investing
Period.
whatsoever? Yeah. Especially our culture, the Latino culture. They're like, no, don't do that. If the market crashes, you're losing all your money. And it's like,
Son, give it to God. On Sunday,
Right?
I want you to put $10 in
Right.
the basket.
yeah.
that's your savings account.
Right.
God will give it to you later.
So,
That was
that's
what
the
we grew
biggest thing, and even like, I was reading an article 2 years ago in the West Valley, one of the newspapers there. Teachers weren't buying, and this is right around the Red for Ed situation.
Yep.
Teachers weren't buying houses because they didn't have 10% to put down. And I'm sitting there, I was like, you don't need 10%. And I don't know that you're a teacher. There's like programs for you, and no one knew. No one knew. So I think that's the biggest thing. It's just the lack of education, but it's also, you hear the gossip. You go up, you're like, hey, Robert, you're a realtor, and what do you think of the market? The market's going to crash, because Uncle Sam, he said the market's going to crash, and I believe him because he lost his house. So now all of a sudden, even though you're a realtor, you're not an expert anymore because someone else lost their house.
Yeah.
And that's the tough part. It's just overcoming that.
No,
And I think, Robert, you have to start somewhere. So back, me and Robert used to live together, and when we lived together, I had no assets. All I had was debt. Okay.
he had comic
And so
books
how does-
and Star Wars toys. That's what he had.
Yeah, I had a few of those. That was my asset.
That's what
Am
Star
I
Wars
giving it away?
collection.
So we invested in like when Star Wars #1, the Star Wars came back out. We both ran out and bought all like the Jedis and shit, hoping that 20 years from now we'd sell them off and make millions. No,
I think it's still the same price.
Jar-
But
Jar- James- sure.
you have to remember the goal is to accumulate assets. And so again, real estate, like Victor said, unfortunately you need a little bit of money to put down if you're going to buy a house.
Yeah.
Right. And so since people don't have that, then that's kind of not an option for them. So what does that leave you with? That leaves you with bonds, which are trash. I'm sorry. And then there's the stock market. And that's basically how I started. The first thing I did was pay off my debt. And then it was, okay, every book that I read says you got to have 3 to 6 months of money available for an emergency, stowed away. Okay, so that was my next goal. And then once you get that, it's like, what do you do with that money? You got to, and
You call Frank?
so an easy way is to
Don't tell my
you can
wife.
call Frank if you don't know what to do. But one of the easy way is just to dollar cost average and start accumulating stocks. That's what I did. And you will see that when you buy some of that, that it starts to grow in value, which then becomes a motivator for you. Like maybe I need to buy more. I need to buy more until you have enough, and then you see an opportunity like a housing crash, which I did in 2000. I saw it in 2010, and I thought, and you see all these foreclosures, and it's like, oh man, I think it's a good time to buy. And it took me about a year to find something that I liked. But then you use that money that you made from the stock market to invest in housing, and then then that gives you more opportunities. So it's just an accumulation of stuff. And so that's what I would say. So Robinhood can be a good way to put your money in. But again, one of the reasons people don't like Robinhood is because they have they make their money with a payment for order flow method. So some people feel the way they make money is by people buying and selling. Oh. And so if you have uneducated people going in there and you have a lot of fear and then you have a lot of greed, that benefits Robinhood. And so some people don't like that business model, but they're not the only ones that do that. And so you saw yesterday with the IPO came out and it was kind of flat. Yeah, people are just, they have a bad feeling about the app, but I mean, I've used the app. They have relatively low fees. It's very easy.
But again, I think
there is some disadvantages about it, but
anyway. And I think there's different avenues to explore that. And as we wrap up today's show, because we're over about 6 minutes, sir. Francisco, did you want to drop anything or give people kind of a direction? Because I think at the end of the day, this show is just intended for the lay person, the person that's just like the average me that doesn't know where to park their money and just wants to make more of it, and then go to work and say, hey, I made 10 grand today. Ha! You told me you made 10 grand. Where did it go? Dogecoin?
I would never tell you I made 10 grand because then my wife would find out, and then Kylie Jenner lip filler gets sold out again. So that's not going to happen.
Oh boy. So is there any kind of direction, Frank, that people should take? Not that it's financial advice. But.
Again, I mean, I think what we're talking about here is just very general stuff. What Henry said, obviously, it's right, spot on, right? You want to make sure that you have your emergency fund set up first before you start investing, and then you accumulate assets and things like that. So that's basically, just very general information, but it's going to depend a lot on a lot of things, like your income, your tax brackets, the goals that you have, whether you want to retire someday soon, someday later, never. That's when it kind of starts, adding a lot of complexity to it. There are certain things that everybody can do, like having an emergency fund and doing a budget and stuff like that. But then after that, it just becomes a lot more complicated. How risk averse you are, how risk tolerant you are. And so, yeah, it's a little hard to say if somebody has $10,000, what do you do with it? It's just going to depend a lot on a whole bunch of stuff.
Do you buy a house, sir?
Will I buy a house?
Well, I'm getting to the last word. So,
no, I mean, with 10 grand, you can do quite a bit. You can buy a house. I would definitely, if you have money parked, I mean, and you're able to take advantage of it. Take advantage of it. I mean, it's part of the American dream. That's why, our descendants, we're descendants, the people that came over here for property. I mean, it's not like we're China where you're only allowed one property. You can buy 1 million of them if you have the money. So might as well take advantage of it. It's not going to go down. We've proven that fact. So, I mean, if you have the money, do it. If you don't, take advice from them to at least get it started and then go from there. But absolutely buy it.
And as we wrap up today's show, the last thing that I want to simplify things, because I think sometimes we get overwhelmed on terminology and some of the things we talk about. Really, it's coming down to buying stuff now to sell later at a higher price. That's really what all this comes down to. When we talk about asset classes, we talk about holding stuff, we talk about stocks, we talk about crypto. It's about buying it today at a cheaper price and selling it later. That's simple. That is pretty much everything else just kind of falls along that line. So if you have any questions or comments, again, please leave those in the comment section. We'll get to them either next week or the week after, because we like to hear from you guys. Here, hold on. That's it. We're going to call it today because we've gone on for more than we should have. And so if you guys have any comments or questions, I want to thank everybody for joining us. We have Victor.alarcon Acorn here from Prime Lending. We also have Francisco Ayala from the Coleridge Group. Sacramento Satoshi from the King of Crypto. He's just himself.
I love Bitcoin. Hey, Bitcoin's going, it's tripling.
Oh, shit. All right. We're cut off. No more Bitcoin. Again, Robert Morales, RCO Network. We'll catch you guys here next week.
Bye.
Bye now.